Hi guys, welcome to today's session and good evening everybody. And today I'll be discussing about scalping. So what is scalping? Scalping is a trading strategy in which traders profit off small changes for a stock or an option or futures. So scalping basically relies on purely on technical analysis. Especially when you look at the charts, you should be able to understand whether you will be able to scalp that particular stock in that given moment or not. So that's what you do usually on scalping. But yeah, scalping can be done on a stock, or can be done on an options, or can be done on futures, or can be done on a forex. But today I'll be discussing scalping on options, which is the most effective way, and the way where you can make most of the money using scalping. Okay, so one of the biggest advantages of scalping is that it is very profitable. Scalpers can leverage small changes in the price of a stock that may not necessarily reflect the overall trend of the stock. And you don't have to really follow the market or anything like that. You just have to catch the moment, and you have to trade that particular moment. And what are the methods that I use for scalping? I scalp every day at least twice or thrice, and my target is to make at least $200 to $300 on a given day using scalping. I play other options as well, like swings and leaps, and also some short swings and binaries as well. But the most important thing, or the one thing that I religiously do is scalping, because I would like to improve my portfolio using scalping. So that's the main agenda for me on any given day as a trader. So since I've been successful on this, at least from the last few years, I would like to share this methodology to you guys, and also to share how you can scalp effectively. So when you make a scalp, you don't look back and you don't think about whether you made a lot of profits or you made less profits or anything like that. All that you would be caring about is you made money or not. So as long as you are hitting your target and moving out, and if you have strict stop loss, then this is the instrument or the strategy for you. But if you think you cannot control your emotions, and if you cannot cut your losses, and if you cannot use a stop loss on your trade, then definitely it's not for you. Because people often start with scalping and they get emotional and they don't hit stop loss, and they keep doing it and they will lose a lot of money. So be very careful. Only if you have emotional control, only if you have real control on your trade, then do the scalping. And think that there is a trade always there, and there are a lot of fishes in the ocean, and you can always catch them. So don't just lose everything using single trade. And usually scalps are very fast moving, and these are kind of trades where you will be playing the trades on the daily expiration instruments like SPY, SPX, or on future options, or on TQQQ or triple Q, or some instruments wherever they expire in near time. So especially playing options itself is very risky. But if you play scalping, and if you're going to choose an instrument that is going to expire the same day, then you are going to lose real fast if you don't have the technique, or if you don't practice it. So before I start or show you uh, what are all the studies that I use to do scalping, this is a humble request to each and every one of you, that before you start scalping, do a lot of paper trading, get control, make sure that you have a lot of control on putting stop loss when your trade is going south, because that is the most important thing for a trader who's scalping. because if you bring your emotions in between, then you're definitely going to lose the trade. So make sure you practice that the minimum profits that you book in scalp is all you need. Okay, so don't break your brain, or don't break your idea, don't break your trade strategy. All that you try to do is get in, get out, be it a profit or be it a loss. Let the losses be small so that you can always use your capital for the next trades and make profits out of it. Okay, so let me start with a clean chart here, because I would like to show you from beginning what are all the studies that I use, and also their scalping can be done on multiple instruments, but I love to do scalping on SPY or SPX based on the budget for the day. So if you have a lower budget, I would recommend you to play with SPY, because SPX moves drastically and it will burn hundreds of dollars in no time. So if you use SPY, the contracts are small and you can always scalp them quickly. And it I recommend you to first start with paper trading and with SPY, because that way, once you get familiar and once you learn, then you can get into SPX or any other instruments that where the option contracts prices are high. Okay, so let me start with the most important thing that I always have on my charts um, when I do trading using SPY. So the first thing that I always look at is VIX. Okay, so VIX tells me, and VIX is an inverse instrument about showing the fear gauge or the fear index on charts. Basically, I'll cover this in a different session, but I'll tell you why I use wicks when I always do scalping on SPY. Okay, so there are totally four factors that I always look at before I enter into a scalp trading. So the first one is identifying the supports and resistances. Okay, so how do you identify a support and resistance? So I have already covered about support and resistance in my previous sessions. So if you are not familiar or if you are a new trader, go ahead and check support and resistances on my YouTube channel. It's predictingmarket.com. You can always search for it and you can identify. So just as a quick example, right? Um, any point where you have three or more candlesticks meeting is can be called as a support. So in this example, I have drawn a line here. I'll call this as a support because if you see, the candlesticks try to move below this, but it held it at this level and always moved up. So this is what I call as support. And resistance also is the same. So this whatever I say is with respect to the scalping, and there can be multiple definitions for supports and resistances, but this is specifically for scalping. And when I'm putting a drawing resistances and supports, right, just follow me like what I'm doing. So if you see here, this candlestick tried to move about this level multiple times, but it couldn't cross and it held there, right? So I'll call this as another resistance, and I have one more resistance here. So if you look at this line, right, so even here, it tried to move multiple times up above this line, but it couldn't break above. And these are the three lines that I drew, where I'll keep this one as as a resistance. Okay, so I'm gonna mark this as blue. I'm gonna mark this as blue, right? And I'll make this as red because this I'm calling as support. Okay. Okay. So if you look at these lines, right, you can always identify a trade based on support and resistances. Okay. So let's say you already drew this line. Okay. Now, if the stock is going to go closer to this line, okay, so in this example, right, so I'll try to extend this support line a little longer, okay, and I'll keep it until here so that we can use for this demonstration purposes, right? So if you look at this, the stock or the candlestick, the stock's candlestick, it broke below this support line, right? Now it's going drastically down. Okay, so can we make a trade here? Definitely yes, right? Because here it broke the support line and it immediately followed a bigger dip after it broke below this support line, right? So I would definitely enter my trade as soon as it broke below here, and I would probably enter when it was at 383.47, and I would have exited at 382.79. So if I had bought a 383 put option at this point until here, it would have definitely made me around like 30 to 40% of the profits on the same day expiry option. Okay, so this is an example of a scalping, right? So this is one way of doing it. The other way of doing it is, supports and resistances are straight lines, and we know that or the stock trend doesn't move in straight lines. It actually moves in a zigzag uh, pattern, and it always moves in curves and zigzag with zigzag patterns, right? So I would always try to follow something called exponential moving average, and especially 200 exponential moving average to help me or start a scalp, because an exponential moving average automatically adjusts based on the stock movement or the trend of the stock movement, right? So if you look at it, it wouldn't be a straight line. Okay, so it moves along the price action, and it always try to move along with the stock based on the last 200 candles, right? So I always try to use 200 EMA as my support and resistance before I open a trade. And along with that, what I use is something called stochastics fast. So if you are on think or swim, right, you can always see uh, whether like how to add this study. Okay, so it is called stochastics. Let me show you fast. Okay, so this gives right here. So this is a standard setup, and I always just add this study, and I'll just follow stochastics fast, because stochastic fast tells you the exact confirmation, or it gives you the confirmation on the scalp whether it's the right time to enter or not. So we basically identify whether there is a divergence on stochastic or not. So divergences happen in two incidents, right? So whenever we are coming down, the stochastics fast goes over the average line, and whenever the stock is going up, the stochastics line try to go like or diverge above the average line. So that way you can actually determine whether your whatever the scalp that you're trying to make is effective or not. So basically make or take more advantage of the scalp, right? So if it's more like a confirmation on the scalp that you do, right? So let me show you an example that had happened today morning, right? Okay, so today morning, at around, let me show. So where was this? This is, yeah, Monday, right? Okay, here we go. So today morning, let me actually get to the right point. Yeah, here. So today morning at 8 o'clock, when the market opened, the morning candle, the opening candle, it went up. Okay, it has hit the 200 exponential moving line, and it did not break above, and it started falling down, and it closed the candle here. Okay, so when you look at this just a 5 minutes before, the stochastic has given an indication. Okay, if you see, there was a doji candlestick here, which says that market is going to go down, and also the stochastics confirmed the divergence over the average line, right? So if you see here, at this point, this red line is crossing over the purple line, right? So if you look at that, it's basically trying to diverge on top of this, and it gave an indication that there is a huge sell-off coming. And this one are the retail traders who thought, like, since the market is open, the SPY is going to go up, and they tried to pump, but the institutional traders, they pushed it back, and it did not cross over the 200 MA, and then it broke below. Okay, so this is a right indication at this point, wherever I have selected, for you to start your scalp, right? So I made a scalp here. I entered on SPX, and I scalped 180 bucks or something like that this morning. And as soon as the candlestick came down, I sold it. That's all. So I closed the trade. So what you can do is, since the stochastic didn't diverge above the average line, you can hold it until this confirmation, and then you could have sold. Like if I had done that, I would have made like 40-50 bucks extra there. But that is something that I didn't do because I was happy with my profits, and I want to just scalp for only one candlestick, and I had closed the trade as soon as that candlestick hit here, and then it started here, and then it went down. If you look at this candlestick, and then tried to beat up, but I was happy with that trade, and there was like high IV, since this is opening of the market, and I was out of it. So I'll show another example, right? So the other example, so whatever the trade that I made today morning is based on 200 EMA, but I'll show another trade that I made this morning. This is based on the support, right? So if you look at this one, if I draw a support line like this, right, what had happened here? Okay, so I kind of saw this candlestick, and I got in a trade here, and just to take confirmation, right? What I was trying to do is I basically entered after this fast line crossing over the average line. I took a confirmation, and I tried to enter here. And when I entered, it went up, and again it came back down here. So I had to hit a stop loss in this example. So I moved out of this trade, and I lost it around like probably 30 or 40 bucks here with this trade. And then what I did is I kept waiting here, and I was waiting for another candlestick, and I looked at this candlestick, and I took a confirmation here as soon as there was a divergence on the stochastic fast K. And as soon as that the divergence came in, I took the trade, and I waited until here, and I saw that the stochastic is going above 80s, and I felt confident that this trade scalp is going to give money. Like I scalped like 80 or 90 bucks, and I moved out of the trade. So that's what I did today, and I ended up with like $220 profit. Candlesticks with the support line. And the other examples, I mean, I did not trade anything else today, but this is how we can actually scalp using stochastics and the 200 EMA line, and putting or drawing the support lines and the resistance lines. So I'll tell you why VIX is very important, because whenever I see a doji candlestick on VIX, it gives more confidence to me that it is going down. It's on either side, right? So I also follow the support and resistances on VIX to confirm whether the market is going in the right direction or not. Let's say if VIX is going up, then the SPY will be going down, right? So this is another confirmation, and I always take that confirmation before I scalp, just to make sure that I'm on the right direction, right? So if you look at both the trades here in the morning trade, where the VIX went up and the market came down, the SPY came down, and also if you see in the opening trade, right, somewhere around here at 8:30, you see here, the SPY shooted up, like VIX, sorry, VIX shooted up, and then SPY went down. So there also I made a confirmation, and I was able to make the trade there. So that's how VIX helps me on taking the confirmation. So these are the things that you can follow, and you can open up the trades. So I wish this session is helpful for you guys and you have learned. So let's try to meet in the following weeks and see what are the other topics that we can cover. Okay, so if you have any questions, please post your comments below this video, and I will try to respond to you guys. Okay, thank you.